Hi everyone and welcome back to another live trading series. Today is around noon on Tuesday, March 9th. I've been quiet pretty recently. I haven't been releasing any live trading videos because I've just been sitting and watching the markets. I haven't done any trades. Since I sold a lot of puts, when you sell a put, you usually sell it out of the money, around 10, 15%, maybe 20 if you can. When the market starts going down, my puts, all of a sudden I'm like indirectly losing money. I'm at an unrealized loss. And I kind of have to sit back and watch to see if the stocks go up. So when you sell puts, you're bullish on the stock. You don't want to get assigned. You don't want to be forced to buy shares, but you will accept them if it happens. So if we look at SPY over the past couple of weeks, it's been, topsy-turvy. It's been tanking, going up a little bit. But I do want to show you just example. Let's say Apple. Apple the past couple of weeks, it was at 138, ended up tanking. Slight rebound. Again, this is like we're setting lower highs and lower lows every day. This might be a dead cat bounce. So it's up 4% today, but I'm not going to read too much into this. This doesn't really mean anything. If we look at the S&P 500 chart, everything's kind of up minus Disney, but I'm not going to read too much into this. It might just be like a temporary day. Nvidia yesterday lost 7 or 8% and now it's back. I don't know. It does kind of stress me out because I do have a leap on this. I am bullish on Nvidia, so we'll see. We'll see what happens. If I do show you what's going on here. Okay, losing internet connection. And we're back. Sorry about that. Don't know what happened there. If we take a look at my open P&L, I am down unrealized $44,000 today, and I am stressed. I've been kind of buying into the hype. I've been selling a lot of options on meme stocks because, say it with me, I'm an idiot. Yes. So you should always sell options on, sell puts on stocks you want to own. Turns out when these things tank, I don't really want to own them. So I did get a little scared. If you take a look at FCell popped 20% today. And this is insane. I went from in the money to out of the money. I sold puts on them. So if you're new to options trading, when you sell a put, you can be forced to buy 100 shares by the certain date at the certain strike. So how this reads, I can be forced to buy FCell by March 19th if it's at $13 or under. Right now it went up to 15, but yesterday it was slightly under. So I sold each contract for 177 and now it's worth 80. So $177 contract. Right now it's worth 80. I am at 50% profit, so I am going to roll this. But let's say this was, let me see, can I find something that's in the money? Something I'm losing on. Laser. Okay, this is perfect. If we look at Laser, right now I sold the 5 puts at the 25 strike, but they're currently at, let's see what it's looked like over the past few weeks. So when it was around $40, I sold these puts. I didn't think it would hit 25, just my luck. It ended up tanking. It's around $23 right now. So when you see it says in the money, yes, that means I can anytime, because it's in the money, at any time, I can be forced to buy 500 shares. Take a look. I sold these for $170 a contract, and now they're worth $350 a contract. I am losing money. I'm losing $900. The good thing about selling options, you can sell out further in time. Days to expiration, 10. I can sell, hopefully I can close this at a loss, sell another 5 further out in time. Maybe I can break even. Maybe I can reduce my income a little bit. So let me show you how to do this. So let's just read it. If we go here. So if we go out another 30 days, selling puts, that's what we're going to do. So it was $350 a contract. But if I sell out at the same strike 30 days away, it is around $440. So I am buying myself more time for Laser, like that's the ticker. I know it's called Luminar Technologies, but for them, I can buy another 30 days for them to go from 23 to hopefully at least 25 and higher so I can close them out. So I can buy them back at $350 a contract, but then I will sell them at $440. So I will be making around $90, hopefully $100 a contract. But if I don't think it'll go back to 25, I can roll it down. This is called rolling down and out. I will be taking a slight loss, so I'll be buying them back at $350, selling them at around 300. So I will be taking a $50 loss, but I will be rolling down $2.50 a share. So when you think about, I sold 5 contracts, that's 500 shares. So I will be saving a lot. Let me just see how much cash. 250 times 500. I'll be saving around $1,250 if I do get assigned at 22.50. So I can do that. I'm not sure what to do. What also I could do, by March 19th, they can force me to buy 500 shares at 25. And right now it's 23. But what I can do, this is called the wheel, I guess. Like, I've never really ran the wheel. I just like selling puts, not getting assigned. But I can choose to take assignment at, they could assign it to me right now. But once I own the shares at 25, take a look. I can sell covered calls because then I own the shares. I can sell a 40-day call. So today's like March 9th. I'll go April 16th. I don't know what that is, 35, 40 days. I can sell at the exact strike I bought it at. So they'll force me to buy at 25. Once I own the shares, I can sell a contract that will force me to sell at 25. But take a look. Someone will pay me $230 to buy this contract. I can even go out. So I can go $27.50. Someone will pay me $165 to potentially buy this stock. So they're bullish on this stock. That's why they'll be buying this. There's a lot of things you could do. I can accept assignment and sell calls. I can close out my puts and sell another put at a profit, or I can roll it down and take a small loss. But I will be saving myself these, $2.50 a share if I wanted to roll it out. What else is there? There's something like FSell. So FSell right now, it's out of the money. So when it says in the money, no, because I sold these puts at the 13 strike, and right now they're worth 15 each. I can close these out at a profit, or I can roll them out further in time. So I obviously sold the March 19th at 13, so it's $80 a contract. If I go out further in time, the same strike 30 days out is 164, so twice as much. If I want, I can roll it down. If I want to break even, I don't know why I would do this, but I would sell another 30 days, but $2 down. So I'm, buying at 80, selling at 80. So I roll down 2 strikes. This is if I don't think it can handle, if I don't think it'll stay at this strike. Also, since my strike price is 13, I can accept assignment at 1,000 shares at 13, and I could sell covered calls. So, right now, it doesn't really, obviously, since, I can't really, this doesn't make sense. I don't know why I said that. I can't get assigned because it's at 15 right now, and my strike is 13. But if by March 19th, FSL drops to $12.99 and I get assigned, I can sell covered calls. So if you want to know what at the money calls would look like, let's say my strike is 15 and I sell at 15, I can sell at the money at around $275 a contract. So since I have 10 contracts, that'll be very high. It'll be $2,750, but I'm not sure I'm going to do that. So I think that's it. What else? I'm kind of screwed on Palantir. Oh, no. Let's look at Tesla. Tesla, take a look at this. I sold a 1-week Tesla put for $470. And Tesla, thankfully, went up $83 today. So I went from losing money to making money. I sold this for $600 for one contract, and now it's worth $88. So I will close this out. I might roll it here for you guys. So if we just take a look at Tesla, I'll only roll it out another week. So what would be a good strike? I'm feeling good around 530, 500 for Tesla. Yeah, so around 500, I can make $440 rolling another week. 530, make another $600. If it drops, if I lose this entire 15%, could I lose 15%? Probably. That's kind of scary. Let me just do this. So I'll buy this back. So if you just go custom, add a put. So to roll something, you have to buy back the exact option you sold. So this is my buy to close, and I will sell a new one another week out. I think for the strike, 520, if I could get exactly $500 for this, I think I'd be pretty happy. So I'm trying to make at least $500 a week off of Tesla, but let's see what happens. So buy to close Tesla, that's getting rid of my original obligation. Sell to open, this is another week out. I will be making $500. Let's sell that and let's see what happens. Order filled, nice. Other items, ARK. ARK right now is in the money. I sold a March 19th 125 put for $1,100. I am making a little bit of money on it, but because time went by, like I am a little bit profitable, but it does say in the money I can be assigned. Let's see what ARK is trading at. ARK. So right now ARK is 120. My strike is 125. So again, there are a few things I could do. This video is dragging. Okay, another 30 days. Right now, ARK was around $8. So I can roll down from 125 to 120, selling another 30 days. I could roll down $5 and still make around $100 because if you can see, right now to buy this back, to close out my obligation by March 19th, I'll have to buy this back. So I'm minus $820, but then roll it out 30 days. I'll sell this plus $930. I will make, let's say, $100 in my pocket. Not sure what I'm going to do. I am going to sit and watch. I don't think I mind getting assigned ARK at 125. Because if you look another 30 days, if I do sell at the exact same strike, that's $700. So let's say I own 100 shares at 125. That's $12,500 US, but I'll be selling and making $700 for this 30 days. So if we go 700 by 12,500, I'll be making 5.6% if I get assigned at 125 and I can sell at 125 again. What I might do, I might try to double dip my gains and move it up another $5. So if we take a look here, 520 divided by 13,000. So if I sell this call, I'll only make 4%. So 520 divided by 130, fine, that's only 4%. But I am making an additional $500 here. So they'll force me to buy at 125, but then I could sell 100 shares at 130. So that's an additional $500. So my return, let's say it's 1,000 divided by my investment, 12,500. I will be making like 8%. But yeah, I think that's it for now. People were asking, how do you defend, or what do you do when, I guess this is a bear market. What do you do when things go down, when things move against you? If you take a look at my positions, everything, open P&L, like everything's negative right now. Like I'm losing a lot on Corsair. I bought Corsair Leaps. I'm losing money here. I might do another video on in my poor man's covered call update. I might sell another one, but we'll see what happens. I might save that for later on. Who knows? So Corsair, if I just isolate Corsair. So I bought 5 Leaps at 2,500 a contract, and I've been selling covered calls against them, but I didn't expect Corsair to drop so much. I didn't expect anything to drop so much. So, my Leaps are losing value, and I'm not able to make as much when I'm selling calls, but I'll figure it out. I'll continue selling calls on Corsair for the entire remaining 283 days. So yeah, long video. Thanks for watching. Ask me any questions you have. I'll try to make a video on it. So thanks for watching. Tune in to the next one.